Mexico's economic crisis deepened today with stocks dropping sharply and the peso still under fire. A government austerity plan announced yesterday and billions of dollars in assistance from the U.S. and others apparently have not bolstered the confidence of investors. Here's ABC's Bob Jamieson.
There was such panic on the Mexican stock market that some brokers advised their clients to sell regardless of the loss. When the trading ended, the market had lost another 7% of its value. This year alone, Mexican stocks have fallen 20%. A similar loss here would equal a 750-point drop on the Dow Jones Industrial Average. The peso also continued to collapse. It has lost 40% of its value to the dollar in the last 3 weeks. And the crisis has grown despite $10 billion in aid from the United States and Canada, Mexico's partners in NAFTA. It erupted when the government of new President Ernesto Zedillo announced wage and price controls and spending cuts to deal with Mexico's economic problems. The country has a growing trade deficit, huge foreign debt, and soaring inflation. It also has $7 billion in short-term bonds coming due in the next 3 weeks, much of them held by American investors. Economists say that should not be the only concern about America's second biggest trading partner.
Mexican goods will be a lot more competitive in the American market, and American goods will be a lot less competitive in the Mexican market, which could cost jobs for American companies selling into Mexico.
In Washington today, President Clinton said that the economic crisis in Mexico is far too severe and its impact on the U.S. far too important to wait for Congress to make up its mind. And so Mr. Clinton has acted on his own to shore up Mexico's currency, the peso.
Because Congress cannot act now, I have worked with other countries to prepare a new package. As proposed now, it will consist of a $20 billion share from the United States' Exchange Stabilization Fund, which we can authorize by executive action without a new act of Congress.
That $20 billion in reserve U.S. funds the president decided to use for Mexico is only half the amount he had asked Congress for. But combined with more than $17 billion in additional funds the administration rounded up from international lending institutions, officials said Mexico will have about the same total amount to help stabilize the sinking peso.
In our judgment, the financial distress had reached the point where it was absolutely imperative that the president act now. And that was very much the president's view and the view of the bipartisan leadership this morning.
Relieved congressional leaders were only too happy to confirm that.
I'll be sending a letter to the president this afternoon along with Gingrich and Tom Daschle and Gephardt, in effect supporting the president's position, so he won't be out there by himself.